the vibrancy in the job market when the economy is going through a epic challenge of inflation? Ramani Dathi joins us, Chief Financial Officer with Teamlease. Ramani, it's the first time I'm interacting with you on this forum, so it's lovely to connect with you. You know, the things which we always use as a benchmark to judge the economy is jobs, 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 and jobs and jobs. What is the recent data indicating? Are things moving in the right direction or are they slowing down?
No, we are nowhere closer to slowness. In fact, the recent report that we released yesterday on employment outlook for Q2 is again representing a 7% quarter-on-quarter growth. And we are, as per our report, we are almost out of the COVID related job losses. So the intent to hire is at 27-month highest. And we expect this kind of trend to continue for the rest of the year as well. And this is driven not just by the IT industry, because I know for the last 1 year or so, all the talk is about the IT industry hiring, highest demand and all that. But now we are seeing the demand coming across all industries, not just IT, it's education, telecom, e-commerce, retail, essential, healthcare, banking and financial services, FMCG. Across all industry, we are seeing very strong intent to hire. To some extent, that's also because the attrition levels were also very high, especially last quarter, if I take. So that's one of the quarters with highest ever attritions that we had over the last few years. So highest attrition coupled with very strong demand. So that's also translating to conversion of a lot of new jobs, especially in formal industries, metro cities, again, largely metro cities. So we are seeing this strong trend. There is some sort of slowness, I would say, in few industries like manufacturing, infra, and agri-related. But with government side also with push like PLI schemes and others, we believe that in the coming quarters, those sectors will as well push.
Okay, now walk us through your interpretation of data. The trends which you're talking about and the data which you are looking at it, is this for listed and non-listed? Is this for the startup as well as the gig economy? I'm just trying to understand that the evidence which you're sharing with us, it's based on what data?
So it's not just listed companies. So we cover a sample of industries and companies across listed, private, but largely formal industry. So because we don't get that much of data from informal industry, gig in the sense, gig that is getting covered under e-commerce, the food delivery companies, those are getting covered, but not totally the MSME segments and informal segments are not covered in our data.
Be specific about IT. Attrition is high and wage inflation is high. This year, do you expect attrition to be lower and wage inflation to be lower?
Looks like, because while Q1 the attrition levels are very high, for Q2 we are seeing early indications of attrition levels kind of tapering down, and with the kind of salary corrections that have happened over last 1.5 year in IT industry. So this year also again the early indication is that the salary inflation may not be as high as what it was a couple of quarters back. So the attrition level will also come down for Q2 and Q3 in IT.
Okay, that's good news for the markets. We've been tracking margins, right? That attrition levels should be coming down has been one of the big red flags as well on the Loud Street. Good morning. This is Nentara also joining in on the conversation. So, when you're saying that broadly across sectors, it's all looking good when we talk about the hiring, but at a time when we're also seeing inflation, when we're seeing this broad-based hiring, is it happening at higher salaries? Can you give us an update on that?
Yeah. So the maximum hirings that we are seeing right now are at junior level, because at senior level also the hirings are happening, but not at the highest level. So the junior profiles, especially into sales, marketing, the programmers within IT, also the entry level jobs of programmers and engineering blue collar profiles. So these are the cases where we are seeing the maximum hirings happening. And also, as I mentioned earlier, again, we are seeing maximum jobs getting created in metro cities and tier 1, tier 2 kind of cities. in the smaller cities, while the companies are talking a lot about decentralization of their operations and creation of more jobs in smaller towns and cities, as of now, we haven't started seeing the jobs on ground in these smaller locations yet.
The other thing I want to touch upon with you, because of COVID, the reverse migration that we had seen, then we had inflation. From startups to unicorns to those in the old economy, there was a lot of talk about shortage of gig workers, shortage of labor. Is that behind us now?
No, there is always this thing of unemployment and shortage of talent. It's not really shortage of talent. It's mainly the gap between the matching of demand and supply, because we have been hiring only 5% of the job seekers who approach us for a job. So the rest 95% maybe because of the fitment, because the candidates have to be mobilized from some other location, or they have a different skill set which the companies are not looking for. At this point in time, except for IT, we are not seeing that much gap in terms of demand and supply. So we are having a very good supply of talent across other industries. IT definitely, we have a crunch, and that's also getting reflected in the kind of salary inflation and the attrition levels there as well. But otherwise, non-IT, the demand and supply levels are good enough, and we are able to close almost 50 to 70% of open positions that we are getting across the industries.
Hi, morning. Across the board, not just for IT, what about the wage inflation? And I want to get your insights on this in terms of how different you're seeing the average appraisal this year versus what we've been seeing as the historical average.
Sure. So historically, it used to be about 7 to 8%, and over the last 12 to 18 months, the average was almost at 12 to 14%. So it's almost close to double the kind of salary inflation we have seen in IT. But this year, again, the trends look like it may come down to maybe 8 to 10% kind of range. It may not go back to the pre-COVID levels because the demand is still at maximum. But having said that, it would be lower than the last 2 years of salary inflation that we have seen in IT. I think that's also because the attrition levels are slowly coming down. So while the large IT companies, products, captives, where the hiring trends are very strong, among the new age companies, unicorns, we are seeing little slowness in terms of their hiring numbers.
We are also seeing massive layoffs taking place within the startup space. A lot of techies across the board been losing jobs, etc. I just want to understand sectorally for new tech, for IT, for startups, which had been employment generators. Is there some sort of a sector churn?
Definitely within startups, and I would say not just startups, companies which are kind of running on investor funds and money. So there we are seeing some kind of stress, the open positions being kept on hold, hirings being kept on hold, and even some sort of firings and layoffs are also happening in some companies and some of these startups. But that's only for a small segment of these companies. The traditional IT companies, IT services, and other product companies, there we are not seeing any kind of slowness, and there is no hold on any hirings or open positions. In fact, the demand is growing quarter on quarter, as we have indicated in the report. And same thing. So we believe not just IT, in all the traditional industries, the numbers are now getting back to pre-COVID levels, be it retail or the telecoms, tourism,